All right, strap yourselves in because today we're going deep on UK capital allowances.
Ooh, yeah.
These are those tax breaks, right, that the UK government gives to businesses
Right,
to like encourage them to spend money,
right.
on like equipment, buildings, that sort of thing.
Exactly, yeah.
It might sound a little dry, but trust me, if you're running a business in the UK, this is like must-know stuff.
Oh, absolutely. And we've got a ton of research and articles here, so
Yeah,
we're going to try to break it all down for you, make it simple.
perfect.
Yeah, by the end, you'll be capital allowances experts,
Uh-huh.
ready to make some smart decisions for your business.
Love it. Okay, so let's kick things off with some of the recent changes that have everyone talking, right? From April 2021 to March 2023,
Right.
there was this thing called the Super-Deduction, which was basically like a tax deduction on steroids.
It was. Yeah, it's really generous.
Yeah.
Businesses could deduct a huge, 130%
Whoa.
of the cost of qualifying plant and machinery. So you can imagine
What?
spending, say, 100,000 pounds and then knocking off 130,000 pounds from your taxable profits.
Hold on, 130%? That's like more than you even spent.
Yeah.
That sounds a little too good to be true. Was there a catch?
It was temporary, right? Meant to boost the economy after the pandemic.
Okay.
But, all good things.
They come to an end.
They do. And in April 2023, the super deduction was replaced
Right.
by full expensing.
Okay.
And they continued the 50% first-year allowance for some assets.
So the party's over, but we've still got some decent incentives on the table.
Yeah.
So break it down for us. What exactly does this full expensing mean?
So with full expensing, you can deduct the entire cost
Okay.
of qualifying plant and machinery in the year you buy it.
Okay.
So it's not 130% like the super deduction.
Yeah.
But, 100% is still pretty amazing.
I mean, yeah, that's not bad at all. So say I need like a new piece of equipment.
Yeah.
For my business, does that mean I can like write off the entire cost just like that?
That's exactly it. And that can be a game changer for businesses, especially for cash flow.
Yeah.
Because instead of spreading those deductions over years, you get it all at once,
Right.
freeing up that cash to reinvest in other parts of your business.
That makes a lot of sense. Now, you mentioned a 50% first-year allowance for some assets.
Yeah.
What's that all about?
So this allowance applies to things like integral features of buildings, so like heating, air conditioning,
Okay.
and those long-life assets.
So not like your laptops and desks, more like the big built-in stuff.
Exactly, yeah. The infrastructure that keeps the building running.
Okay, so why the different deduction percentages then? Why not just give everyone 100% up front?
I think it comes down to the lifespan and depreciation of the assets, right?
Yeah.
Like integral features and long-life assets, they depreciate slower
Right.
than, say, a piece of manufacturing equipment
Okay.
that might become obsolete much faster.
Right.
It's about spreading the tax benefit over a longer period, matching the asset's lifespan.
Okay, that makes sense. So we've got full expensing at 100% and then this 50% allowance for specific assets.
Yeah.
Not quite as good as the super deduction, but still pretty sweet deals.
Yeah.
But hang on, something's not adding up for me. You said the super deduction was 130%,
Yeah.
and now we're down to 100% with full expensing. That seems like a big drop.
It's not as dramatic as it seems. There's a key detail here
Okay.
that a lot of people miss. So alongside full expensing, corporation tax went up
Oh.
from 19 to 25%.
So they give with one hand, take with the other.
Pretty much.
But does it, actually even out?
Yeah, it does. The actual tax savings per pound invested are very similar under both schemes.
Oh, so...
So with the super deduction, you saved 24.7 pence per pound.
Right.
And now with full expensing and the higher tax rate, you save 25 pence.
Oh, so it's basically the same.
Yeah, they've just adjusted things to keep the incentive roughly the same.
I see. So it's not about being less generous. It's more about finding a system that's meant to last.
Exactly. Shifting from a temporary thing to a permanent system.
Yeah.
Trying to find that balance, right? Encouraging investment, but keeping the tax system sustainable.
Okay, that makes the whole picture a lot clearer. So we know what these allowances are, how they've changed.
Yeah.
But let's get down to the brass tacks. Who actually qualifies for these tax breaks?
So for full expensing, the main thing is the plant and machinery needs to be brand new,
Okay.
unused, and there's a time limit.
Right.
To buy it between April 2023 and March 2026.
So no going on eBay, finding some secondhand equipment, trying to sneak in a deduction. It's got to be shiny and new.
Exactly. It's about getting businesses to invest in new assets, to get the economy moving.
Yeah. Yeah, it makes sense. Okay, so let's say I've got my eye on some new equipment. It ticks all the boxes.
Okay.
How do I actually claim this full expensing magic?
The process itself is quite straightforward, but it's all in the details.
Okay.
So first, you have to be absolutely sure
Yeah.
that you've identified the assets correctly.
Okay.
And then, this is super important, impeccable record keeping.
So we're talking receipts, invoices, like the whole shebang.
Absolutely. Got to prove the purchase, the cost of the qualifying assets.
Right. Okay.
No stuffing those receipts in a shoebox.
Uh-huh.
And then, when it's time to file your corporation tax return,
Yeah.
you just include the value of those assets under the capital allowances section.
So stay organized. The process itself isn't too bad, but I'm guessing there are some pitfalls to watch out for.
Oh, yeah. And this is where it can get a little tricky.
Right.
The biggest mistake businesses make. You guessed it.
Bad record keeping.
Bad record keeping, yeah.
Yeah.
Missing receipts means missing out on those tax savings.
Ouch. So file those receipts like your business depends on it.
Exactly.
Because, well, it kind of does. What other traps should we be aware of?
Another common one is confusing the old super-deduction rules
Right.
with the new full expensing ones. Because remember, super-deduction is gone.
Yeah.
Anything bought after April 2023, it's all under the full expensing rules.
Yeah. Okay. Yeah. With both going on in 2023,
Yeah,
I can see how that would be easy to mix up.
definitely. And don't forget those special rate assets.
Right.
They only qualify for 50% in the first year.
Yeah.
Not everything gets that 100% up front, so
Yeah.
you got to know which is which.
Okay.
Or you might get some surprises at tax time.
All right. So to recap, accurate records are key.
Yeah,
Know the difference between the old and new rules.
definitely.
And be totally clear on which assets get which allowance. Sounds like a good time to call in a professional.
Oh, for sure. Having an expert can make all the difference.
Yeah.
They'll help you navigate everything, avoid costly mistakes, and make sure you're getting the most out of these allowances.
Okay, so we've covered the basics, the changes, who's eligible, even some things to watch out for.
Yeah.
Now, I want to get strategic. Like, how can businesses actually use these allowances to their advantage?
That's a great question. And that's exactly what we're going to dig into next.
Perfect.
Some pro tips and strategies to help you make the most of these capital allowance opportunities. All right, so let's dive into some strategies now. You're a business owner, you've got money to invest.
Right.
You want to make the most of these allowances.
Yeah.
Where do you even begin?
It's like, I've got this toolbox full of, like, amazing tools,
Yep.
but I don't know which one to use for which job. Give us those insider tips.
Okay, so first things first, don't let the tail wag the dog.
Okay.
Just because there's a tax break doesn't mean you should, like, run out and buy everything.
Right.
Take a step back, look at the big picture, like your business goals, your investment needs.
So it's not just about chasing the deductions. It's about making sure those investments
Exactly.
actually fit into, like, my long-term plans.
Yeah, exactly. Ask yourself, does this investment really help my growth strategy?
Right.
Will it improve efficiency, productivity?
Yeah.
Or am I just getting, caught up in the tax break excitement?
It's like resisting that impulse buy at the checkout counter.
Exactly.
Just because it's shiny and on sale doesn't mean you need it.
That's a great analogy. And this is where, having a good financial advisor or a tax professional can be so valuable.
Right. Okay.
They can help you analyze your business needs, model different scenarios,
Yeah.
make sure your expenditures are aligned with your goals.
Okay. So we're being strategic, not impulsive. What else should we be thinking about?
Timing is everything. Remember, full expensing, it's set to expire
Right.
in March 2026.
Okay.
So if you're already planning a big purchase in the next couple of years,
Yeah.
it might make sense to speed things up.
I see. Get in while the getting's good.
Exactly. Maximize those benefits while you can.
Yeah.
But of course, this isn't, one size fits all.
Right.
Talk to your advisor, do the math, and see if it makes sense for you specifically.
Okay. Got it. So we're strategic. We're watching the clock on full expensing. What else?
You got to know your asset categories. Remember, not everything qualifies for that full 100%.
Right. Those special rate assets like integral features, long life stuff.
Exactly, yeah.
They only get the 50%.
50% in the first year, that's right, if you misclassify your assets.
Oh.
You might get some unwelcome surprises come tax time.
Yeah.
Make sure you're applying the right allowance to the right assets
Okay.
to really maximize those deductions.
All right. Strategic thinking caps on checking our calendars, brushing up on our asset knowledge.
Yeah.
Anything else businesses should keep in mind?
Here's something to think about. These allowances aren't just about saving businesses money.
Okay.
They're also about boosting the economy.
Right.
Think about it. When businesses invest in new equipment, infrastructure,
Yeah.
it creates this ripple effect.
Oh, I see what you mean.
Yeah, it's a win-win.
It's not just good for businesses, it's good for everyone.
Exactly. More investment means more demand for goods and services,
Right.
which can lead to new jobs, more productivity, and ultimately economic growth.
Yeah, that makes sense.
Policymakers, they often consider this bigger impact when designing these incentives.
Okay.
It's about finding that balance, supporting businesses while fostering a healthy economy.
Okay, so we're talking strategy, timing, knowing our assets, the big economic picture. Any other, like, pro tips?
One last thing, and it's maybe the most important tip.
Okay.
Stay informed.
Right.
This tax landscape, it's always changing.
Yeah.
What works today might not work tomorrow.
Right.
Keep up with any changes to the laws, amendments, anything related to capital allowances.
So subscribe to newsletters, attend those tax webinars, maybe even, like, become best friends with a tax professional.
Exactly. Knowledge is power, especially when it comes to taxes.
Okay, before we move on, I wanted to touch on something you mentioned earlier.
Sure.
About the potential impact of these allowances on a business's valuation.
Right.
That sounds like a kind of hidden bonus. Can you expand on that a little?
Absolutely. When you're valuing a business, say, for a sale or an investment,
Yeah.
profitability is a huge factor. Right. And capital allowances, by reducing your tax burden, they boost your bottom line,
Okay.
which makes you more attractive to potential buyers or investors.
So it's not just about saving money now. It's about showing you're smart with your finances.
Exactly.
And potentially, like, increasing your business's worth.
Exactly. Imagine two businesses, identical except for how they use these allowances.
Yeah.
The one maximizing those allowances, minimizing their taxes, they look better.
Right.
They're seen as more valuable.
It's like dressing up your business for a big date.
Exactly.
Okay.
Capital allowances, they're more than just a line on a tax return.
Yeah.
They can be a strategic tool for success,
I love it.
both in the short term and the long run.
This has been so insightful. I think we've given our listeners a really solid grasp of how to navigate this whole capital allowances world.
I hope so, but remember, this is just the start.
Yeah.
The key is to keep learning, adapting,
Right.
and always, seek expert advice.
Absolutely. Make sure you're making the best decisions for your business.
Well said. Now, to make all of this even more concrete,
Yeah.
let's look at some real-world examples.
All right. Let's bring all this capital allowances talk to life, right?
Yeah, let's do it.
So picture this. We've got a manufacturing company. Let's call them Precision Parts Ltd.
Okay.
They're looking to, ramp up their production.
Right.
And they've got their eyes on this, like, amazing new laser cutting machine.
Okay, yeah, classic capital expenditure scenario.
Exactly.
So let's say this laser cutter is going to cost them like 200,000 pounds.
Okay.
A big investment, but, could mean big returns.
For sure. So how would these capital allowances we've been talking about actually work here?
All right, so this laser cutter, it ticks all the boxes,
Okay.
plant and machinery, brand new.
Yeah.
And they're buying it within that full expensing time frame.
Okay, yeah.
So they can deduct up a whole 200,000 pounds from their taxable profits.
Whoa, so they're basically getting a 200,000-pound discount on their taxes.
Essentially, yeah.
Just for investing in their business, that's incredible.
It is. Let's say their taxable profit for the year was like 500,000 pounds.
Okay.
After that full expensing allowance, it drops to 300,000 pounds.
Okay.
And with a 25% corporation tax, that's a tax saving of 50,000 pounds.
Wow. That's a lot of money. They could use that to, I don't know, hire more people, expand their marketing, even buy more equipment.
Exactly. It's like a snowball effect.
Yeah.
Smart investments lead to tax savings.
Right.
Which lead to more resources to invest and then, more growth.
Makes sense. Okay, so that's a pretty clear example of full expensing in action.
Yeah.
But what about a situation where, those special rate assets come into play?
Good point. Let's imagine a construction company.
Okay.
We'll call them Build Right Ltd.
Okay.
They're renovating an office building.
All right.
And they're installing a brand new energy-efficient heating and cooling system.
Sounds like a good move.
Yeah.
Good for the building, good for the environment, but where do the capital allowances come in?
So this is where it gets a bit tricky.
Okay.
This heating and cooling system, while essential, it's probably considered an integral feature of the building.
Right, not just a separate piece of equipment.
Exactly.
So that means it falls under those special rate assets.
That's right.
Okay.
So they can't claim the full 100% upfront.
Right.
Instead, they'll use that 50% first-year allowance deducting 50,000 pounds
Okay.
from their profits in that year.
So not the full amount, but still a decent break.
Definitely. And remember, they can claim the other 50,000 pounds later on
Oh, okay.
through writing down allowances spread out over a few years.
I see. So they're not missing out completely.
Exactly.
These examples really help,
Yeah.
seeing how it all works in different situations.
Exactly.
Also shows how important it is to really get the details right.
Absolutely.
And maybe have a tax professional on speed dial.
Uh-huh. Yeah, good idea.
So as we wrap up our deep dive into UK capital allowances,
Yeah.
what are the main takeaways our listeners should remember?
All right. Well, first and foremost, these capital allowances are a powerful tool
Yeah.
for businesses that want to grow, to invest strategically,
Right.
don't leave money on the table.
Exactly.
Yeah.
Know the rules, plan your investments,
Yeah,
and claim every deduction you can.
absolutely. And remember, the tax world, it's always changing.
Right.
Policies shift, deadlines pop up, new opportunities come along.
Yeah.
So stay informed, adapt your strategies as you go.
Great advice. And I think most importantly, don't be afraid to ask for help.
Yeah,
A
absolutely.
good tax professional can be like your guide,
Definitely.
helping you avoid those tax pitfalls
For sure.
and find the best path for your business.
Couldn't have said it better myself.
So whether you're a seasoned business owner or just starting out,
Yeah,
remember UK capital allowances, they're on your side.
they are.
Use them wisely, plan carefully, and watch your business thrive.
That's a wrap. Thanks for joining us on this deep dive
Yeah.
into the world of UK capital allowances.
Until next time, keep exploring, keep learning, keep diving deep